You've just come out of the auction room. Did you buy a block of land?
Nope.
No.
Why not?
Too expensive.
How much did you want to bid?
Oh, about 1,600, something like that.
And what were the prices of blocks this morning?
The last 15 or so blocks have started at 2,000 and gone up to anywhere between 3,000 and 4,000.
So what will you do now?
Well, we have to wait and hope for the best at the next one. So I don't know whether there's a complete shortage of land or what the position is, but the restricted auction was just the same.
I mean, it's ridiculous to sort of pay such a lot of money for a block of land when you don't really own it anyway. I mean, you still pay $100 a year to rent the damn thing.
How did you get at the auction? Did you get a block of land you wanted?
Yes, we did. We were very fortunate this morning, and there were some high prices played, but we played a price that we thought was quite satisfactory.
If you don't, congratulations, but if you don't mind me asking you, how much did you pay?
$3,100.
And what was the size of the land?
Approximately 1 rood in area. At 39.5 purchase this block was.
What was the frontage?
70 feet. 70 foot frontage.
And what depth?
I believe 120 feet.
It still amazes me that even over 5 decades, we're still hearing the same comments as to why home buyers or property buyers are still missing out on getting into the market. And the main comment always seems to be, it's just too expensive. I'm going to wait for prices to either slow down or come back in value. Now, isn't this what we've been hearing over the last 12 months when we first saw rates increase back in May? That, property buyers were just going to wait for the market to, soften a bit more, come back in value. Obviously, there's a lot of commentary that we're going to see at least 20% fall in the market over Sydney. Look, we did see a slowdown in the market. I think the average was probably 10 to 15% on average, okay? But still, property buyers were still holding out for more. They were hoping that, the prices were going to drop more as rates were going to increase. But looking at the data today, that's not the story that we're seeing, okay? In the last quarter, we've seen Sydney grow 3% in value, and as a nation, 1%. So what that tells us is that we're way past the bottom. From what I've seen and being active in the market, I thought the bottom was back in November, December last year, because the momentum had picked up very, very quickly in December. And at the start of the year, transactions have been moving very, very quickly. And we've seen a lot of strong buyers in the market. I mean, if you look at the amount of loan applications from what they were last month, we're up 4.9%. So that just tells me there's more people applying for loans looking for property in the market. So I'd say if you're waiting for the market to correct some more and prices to come back down, well, it's probably not the best strategy. And I think the main reason and contributor as to why we're seeing a shift in the market is that supply levels are probably on average down by 20 to 30% as to where they were last year. So obviously we've got an increase in loan applications and we've got a decrease in supply. Now that creates this massive gap where there's a lack of stock in the market, and that's pushing and putting more pressure in the actual pricing because there's not a lot of available opportunities to actually purchase. Now, we've also seen a lot of investors come back into the market. I mean, loan applications are up 3.7% for investors. And the reason being is that vacancy rates are at an all-time low. We're seeing rentals through the roof just because there's not a good amount of quality, rentals available out there. So investors are actually taking charge and actually looking for opportunities out there. And that's obviously adding to the pressure that we're seeing in the market space. Now, over the next slide, what I'm going to share with you a number of suburbs that have actually gone up in value over the last 12 months. So, not gone backwards, but actually gone up. And that will give you an idea in terms of where the market demand is. As we can see from this chart, certain parts of Western Sydney actually grew on average of about 8%. Western Sydney has always been seen as a good entry point for a lot of first home buyers and a lot of investors looking to enter the market due to its affordability. During COVID, we didn't see much price volatility in Western Sydney. Obviously, there was a bit of a slowdown, then a bit of an increase, but nothing too drastic like any other suburbs where we've seen 20 to 30% growth. And this is probably why we're starting to see some momentum back in Western Sydney itself, is that it didn't have the peaks and troughs like every other area. Now, if we look at suburbs closer into the city, say for instance the inner west, we actually saw some substantial growth, even more than what we saw in Western Sydney. There's the one pocket in particular, Rimba, which is right next to Haberfield. It's a very, very small suburb. That actually grew about probably 16% in value in the last 12 months. Now, the inner west is always a very sought after pocket. Obviously, areas like the Five Dock, you've got the metro coming through, you've got the Bay Run around the corner. It's very, very sought after because it's only moments away from Sydney CBD. It's very attractive to young professionals and young families, but also growing families. There's also a lot of houses, big blocks, a lot of apartment, new builds. It's a very desirable area. And the reason why we're seeing such substantial growth is due to its access to amenities, transport, the CBD, but also good schools and lifestyle. So if you're looking to enter and purchase a property, please do not try and time the market. Obviously, if you've done your due diligence and you're well positioned to purchase something, be active, get out there. Look, I've made some tips which you can definitely use straight away, which will help you along your pathway. First being, no news is better than live news. So rather than listening to the media and reading news articles, actually get out there, go attend auctions and open homes, see the amount of volume, what properties are selling for, well over what the actual price guide is, and what properties are actually struggling. That will give you a better indication of where the market is, rather than just reading data or listening to, commentary over the news. The second tip is speak to a professional. Speak to the local experts, speak to the local agents who are selling properties day in, day out. Speak to a buyer's agent, someone who's actually in the whole process of buying property and understands the process, but also what's happening in the market, how active, what properties are being more, bidded on, what properties actually being sold prior to auction. This will give you a better chance in terms of entering the market and having a better understanding and more confidence in knowing where the true value is of a property, rather than trying to wait for the property market to actually, drop another 10 or 20% before you feel like you want to enter it. Now, the third point is actually to build the team. So when you purchase a property, you don't have to do it alone. You definitely need a team around you. So have the right professionals supporting you along that journey. Obviously, from a lending space, it's good to have a lender or broker. When you actually look at purchasing a property, you need a conveyance or solicitor to actually vet the contract. And also have an accountant. It's always good to have an accountant, if you're buying an investment property, to understand what the tax implications are. And then obviously you would need a selling agent or buying agent to help you, to support you through that journey, to actually help you find the right opportunities, so that you're actually, you're confident when you're making a purchase, rather than it being an emotional one. It's a more of a calculated one. So look, it's definitely, as I say, it's always a good time to buy. You just need to be in the right position to do it. So thank you so much for listening and watching. We'll see you again shortly.